Hi, welcome to this video day. It is the 7th of December. It's Saturday. Just going to give our updated outlook for the Japanese yen today. We're going to be looking at it against the USD and also against the euro. We'll go to the charts in a moment. Now, in terms of the Japanese yen, we're getting really interested in it at the moment in terms of the fundamentals are turning very bullish of the yen in our view. And there's a bullish fundamental that's come into play, which a lot of Forex traders are ignoring. Also, I like the look of the price action as well. Now, in terms of the yen, I expect a really strong move in the coming months of 1,000 pips or more, and it could come at any time. Now, in terms of this trade, it is very much trying to catch the reversal, get in early, which we like to do. Our major focus over the last few months was the British pound. We've done plenty of videos on that. We got in at the turn, went up 1,000 pips plus. I think the yen could do the same. I'm going to go through my logic and reasoning now. We'll go to the charts, but please do keep in mind it is my view as of this specific moment in time. It can of course change in line with the market action and conditions. If you want all our trading techniques and our daily technical and sentiment analysis of 14 Forex pairs, including the two we're going to look at right now, you just click on the link beneath this video and you will get live access to our member center. Right, the setup we'll do first will be USD JPY. On Euro JPY monthly chart. Just very quickly before we go to the daily chart, draw levels of entry, stop and target here. You can see the big picture. You can also see my target, which you can't see on the daily charts. And now, in terms of the bigger picture, if we look over the last 6 months, dollar's fallen below the 110 level, tried to get back up and can't. We tried it last month's candle, this month's candle is red. 110 is the line in the sand for us. We do not want to see a close above that. That will negate our bearish view. So good resistance there. Where could you sell? My own view is, so I'm just get a line there. You can see what I've done. Body, body, and then clear of that body there. Those three bodies line up. Just get through the body. And I think we'll be off to the downside. Where could we go to? 100. Okay. Longer term, yeah, you got some support at 90. I think we'd go all the way back towards the 80 level. I'll go through the fundamentals behind the chart in a moment, but just extremely bullish yen in our view. So I think we can't test the 110 level. We're coming off the level now. Break lower could come soon. And I think we could see a really big move to the downside. Right, let's go over and take a look at the daily chart. All right, on USD JPY daily chart, if you just look at the technicals in recent weeks, not too exciting, about 150 pip range, very low volatility. But when you look at the fundamental sentiment behind the chart becomes more interesting. They just point to limited upside in this pair and the potential of a big downside break coming soon. So let's just go through these points before we do our levels. Now, in terms of the Bank of Japan, they have stimulus in place. They print money. They've got negative rates. And the market thinks an increase is coming, okay, in stimulus, and they're going to cut rates more negative. Typical quote, we expect the Bank of Japan to stay on pause in December but renew easing monetary policy by deepening its negative policy call rate to 0.20% possibly in first quarter 2020. So, next few months comes from UO Bank. There's plenty of other banks that share that view. What we think is really bullish for the yen is there's no more stimulus coming, and the Bank of Japan won't be cutting rates more negative. Why? Because the Bank of Japan, if you look at what they've been saying, particularly Governor Kruder, over the last few months, they've asked for fiscal stimulus from the government, okay? And now they've got it. They want fiscal stimulus from the government because they feel that their stimulus is at dangerous levels and rates being negative, hurting the banks and so forth. So they want a different route. The obvious route is fiscal stimulus. They've got it. Japan's government just announced a 122 billion fiscal package. Okay, it's massive. I think it's the biggest since I can't remember what the earthquake was, but it's significant. Package is expected to push up gross domestic product by 1.4% through next year. So Bank of Japan are getting some help from the government to try and stimulate the economy. I think this fiscal package is largely been ignored by a lot of forex, kind of analysts. I think this is a good quote here. Fiscal stimulus is good news for the Bank of Japan, which has appeared reluctant to ramp up its own stimulus program as it strains at the limit of its effectiveness, which comes from Japanese Times. Totally correct. It's ineffective on its own. Bank of Japan have been doing it for years, hasn't worked. Now they've got fiscal stimulus. I think that's very bullish. The yen is not falling hard when markets are in risk-on mode. Okay, you can see it. We've had multi-year highs in the stock market over the last few weeks. Look, the yen should be suffering. The USD should be pushing up on it. Yen is the number one safe haven, isn't it? I take it the fact that the dollar can't power higher as bullish for the yen. Now, in terms of risk off, this is really dictating my longer term targets on the monthly chart. I just think we're going to go to risk off. This risk on, it can continue for a bit longer, maybe. I don't know when it's going to end, but it just looks like it will. The stock market rally, no one's really excited about it. They're a bit worried about what's going on in the global economy, most investors. Just think risk off will be an additional boost for the yen. So that's in the background. US Fed is on hold with interest rates, but it's stimulating. It's increasing its balance sheet, and it could well be to cut rates even more in the coming months. US economy is slowing up, and they're certainly not going to be raising them. They're already printing money, and they could be cutting them. So for us, dollar, limited upside, a lot of downside. In terms of levels, it's this candle here, I've mentioned it in previous videos, massive institutional readjustment portfolio candle. And I said a few weeks ago, I didn't expect it to get taken out on a close basis, and it was actually. Just got above it, but no conviction to get away from it. Slump back red here, and now just below the 20-day moving average. Now, in terms of if you wanted to get into this pair, where would you get in? We're already in, actually, but we will be adding, and I think this is the level to go for here. It's 108. That would take out the monthly support, so something like 107.80. Get through that round number, break the recent range, and then see if she runs. I think in terms of rallies, you've got a lot of resistance here. Okay, so come off that level. Let's say we've got up there, you can sell back through 109. You wait for a break of 108. It just depends on the way you want to play it. Stop should obviously be back behind those candles. Okay, ours at the moment is at 109.80. If we were clipped out and stop, we'd just wait to see if the 110 level held and come straight back in and stop behind 110. If that eventuality occurs, follow that, or my views obviously in the daily market update. But from a risk to reward point of view, I think it looks really good. And of course, if we do break lower, I'd expect the volatility to pick up. So obviously the stop can come down. For position traders, taking a longer term view of the markets, I think this is a really good trade shaping up to be looking at. And I also like the look of Euro JPY, which we're going to go and take a look at right now. Right, Euro JPY monthly chart, just very quickly before we go to the daily chart, we can see the euro is in a downtrend on the monthly chart, but over the last few months we've had a little bit of a rally. We're now coming up to a significant level of resistance, and there's plenty of resistance here. Okay, so basically it lines up roughly with those three bodies, that tail, body. You can hardly see the last body. A little pokes through it. The level is 121. Okay, now in terms of 121, it's going to be very hard to get too far away from that level. Now, in terms of the fundamentals for Eurozone, we'll go through them in a moment. We're just so bearish. We've got ambitious downside targets. Let's say a very aggressive entry can be used through that tail there, or even coming now, in my view. Long way to go on the downside. Where could we go? I think 110. That's certainly on the cards. Okay, So if I draw my line there, that's what 1,000 pips from where we are now. Risk off comes, then you could overshoot down to 100. Just such limited upside in this pair for us and a lot of downside. Let's go and look at the daily chart. All right, Euro JPY daily chart, and in terms, if we look at the price action, it's not that exciting in the last few months, is it? Just basically choppy and sideways. But again, in terms of this pair, very much like the USD JPY, when you look at the fundamentals behind the chart, just looks like there's limited upside and a lot of downside. I think this pair could go further to the downside than USD JPY. I'm just so bearish of the euro. Reasons why. First one, ECB, central bank, they've got stimulus, print money, and they've got negative rates in place. Okay, I think they could increase stimulus or cut rates even more negative, or do both. They've got a new president. Christian Lagarde takes over from Mario Draghi, or taken over from Mario Draghi. Mario Draghi was a very astute, clever central banker. Really knew his stuff and how to deal with situations and inspire a bit of confidence. I don't think Christian Lagarde is in the same league. She's got no experience of monetary policy, which I cannot see why she's in charge of a central bank. You read her comments in the news. She thinks the best way to help the Eurozone is, money printing, and she thinks negative rates are really good. So, I think she'll be a disaster at the ECB, but I can see, more stimulus coming and rates being even more negative. Now, I would say, to be fair, that Christine Lagarde probably would want fiscal stimulus from governments. Mario Draghi wanted that as well. He never got it. He asked in vain for years. Lagarde isn't going to get it either. So what you've got is the ECB. They've got a monetary policy in place that they tried for many, many years, and it failed. They stopped it for a little while. Now they brought it back, and they're expecting it to work after it failed before. It just shows how clueless central banks are. But I suppose you've got to say to the ECB, they've got nothing else they can do. The toolkit hasn't got any other tools but stimulus and negative rates. So that's what they're going to do. It's not going to help. The economy is about to enter recession. Germany narrowly missed it. Germany will be in recession in the new year. As soon as Germany's in recession, the rest of the zone will follow. Political unity. It is not all one happy family in Eurozone. Okay, that is bubbling beneath the surface. You've obviously seen in the news where you've had problems, say, with Italy, Hungary. It's just not a happy family. And as the economy worsens, that political unity will fracture even more. That's coming. But the reality is the zone is going into recession in our view, and the ECB's policies will not help. Point number 3, risk off favours the Japanese yen. Well, actually, in terms of that, it favours Japanese yen against every major. Wild cards to look out for. Tariffs from the US. We've already seen, obviously, Airbus, WTO found in favour of the US and tariffs. I think Trump, he's really, how would I put it, angry with the auto industry. He could put tariffs in at any time. He can be very unpredictable. We know that he thinks, it's a big problem to the states, the unfair advantage as he sees it, that Eurozone auto companies have. Merkel's coalition. Junior partners not happy. They want to renegotiate with Merkel's party. Merkel's saying no. The coalition falls. You could get real problems in Germany with Merkel not there, or the uncertainty of elections. And keep in mind, Merkel is a steady hand in the zone. She inspires confidence in people. She's very often able to get people together in Eurozone. Very steady, capable politician. Okay, Merkel goes. That is certainly not good news for the zone and confidence in it. And Deutsche Bank lurking in the background. I'm sure you've read it in the news, but it's a huge bank. It's basically bust. Got a massive exposure in the derivatives market, bigger than Eurozone GDP. If they get big trouble there, This won't just reflect on the euro. That will create real risk off. Okay. Yeah, when Lehman Brothers fell in 2008, that's a minor bank compared to Deutsche Bank. I think Deutsche Bank, they're going to have to save it, or there'll be turmoil in financial markets. This is the wildest of the three wild cards, but worth keeping your eye on. Right, let's do some levels, and you do have this really strong rally in the euro here, and you've got that is second level resistance for us. First level is the round number 120. Sorry, I need to get my line straight. My mouse won't do it. There we go. So basically, round number, you can see we get above it here, but can't clear out the round number and come back through, up, very low volatility, bashing into the round number. Then you get a red on Friday. My own view is euro is a sell. Where do you want to sell it? Go through there. You could wait and maybe go through those candles, but I just think, basically through 119.70 should start gaining traction to the downside. Even if the euro doesn't gain traction to the downside as quickly as we hope, it just hasn't got much upside. You can see in terms of when we look at the longer term charts, the risk reward on this from a long term perspective, obviously our view has got to come correct. It's really good. I'm really liking the look at it. I'm already in with a trade, and I will be adding. So yeah, both pairs look good to us. We will update them in future videos, but that is the video for today. Thank you very much for watching me. As per usual, take care. Have a good day.